JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 30th of March 2021. Sorry, 2022. Sorry, I'm stuck a little bit last year. 2022. There we go. So yeah, guys, before we jump into the charts, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course, our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So yep, check us out here on jfdbank.com and click on the research tab right there on the top. So now then, guys, jumping into the sorry, disclaimer popped up again. So yeah, jumping into the charts, the first one I want to pick up here is Nikkei 225, and the Nikkei drifted lower, but as you can see here, it did move above this downside line again, but failed to push through that 28,339 zone. I talked about this level, and then we've drifted back down. So, but however, we did not really drift heavily to the downside. We only drifted lower to test the 200-day EMA, which provided very good support, from which the index rebounded. So yeah, in a way, there is still hope for the bulls here, because if we reverse from this 200-day EMA to the upside, that more buyers could join in. However, I'm still keeping an eye on this 28,339 zone in order to let's say consider, get comfortable with further upside. At the moment, I'm seeing this as a little consolidation area, and I'm going to decide what I'm going to do next after I see a clear breakthrough one of my levels. For the upside, I need to see a push above that 28,339. For the downside, I need to see a drop below that 27,604 zone, roughly around here. At the same time, we could also see a drop below the 100-day EMA. Shanghai Composite, so pushed nicely to the upside, and it's in positive territory so far. To be honest, I think that it's going to end the trading session in positive territory as well. So we have around like 50-something minutes left of trading here. So however, as I mentioned to you before, that this area could provide that support, and so far it did the case. It did the job. It was the case. If you're looking for some higher levels, well, just yeah, we did get that nice rebound, so that's fine. But now I'm looking at this level, this 3,280 zone. I need to see a nice good pop above it in order to go for some higher levels, because at the same time, we would be breaking that 21-day EMA, and potentially more buyers could join in here. So yeah, long story short, for now, I'm keeping an eye on this hurdle. If we do pop above it, then yeah, I'll go for some higher levels. The German index, DAX, and boom, there we go, guys. So we managed to get a nice push to the upside here. We managed to also break the downside line. So look at this positivity that kicked in. I told you about this downside line a while ago, and I said that if we break above this 14,553 territory, then yes, I'll go for some higher levels, initially aiming for that downside line, which we managed to reach perfectly. So that's good news. If we do break that downside line as well, then yes, higher levels could be met, guys. And yeah, for now, everything's kind of leaning a little bit more towards the upside. However, we're seeing on the cash index right now that the index is retracing slightly, so we're around 14,770 zone. So basically just slightly below yesterday's close. Nevertheless, we're still above that downside line, so I would say as long as we remain above it, above that downside line, I'll continue aiming higher, and my next target here will be that psychological 15,000 mark, guys. So yep, we managed to clear the 14,000 mark. Now we are approaching that 15,000 mark as well, which is in between, somewhere in between the 100-day and the 200-day EMAs. Now, jumping into NASDAQ 100. So yeah, NASDAQ is also pushing nicely here to the upside, or should I say, had pushed nicely to the upside. Yesterday, NASDAQ was the best performer among the top 3 of the indices, and yeah, so that's a great result here for the NASDAQ. In general, yesterday, the main drivers, the main driving sectors in the US were real estate, consumer cyclicals, and technology. So let me just jump into this one. So technology was performing quite well. Consumer cyclicals, yeah, your consumer cyclicals like Amazon, Tesla, so these guys, and to be honest, their apparel, I mean the sectors, the restaurants, footwear, those did quite well, guys. I mean, and yeah, that was followed by, I think, yeah, the technology sector. So yeah, technology was also a performer. So in general, the only kind of, let's say, lagging sector was energy. And where do we have? I can't see the. Yeah, I think it's somewhere around here. Okay, I'm confused here because I'm watching another map here. I think the trading view, need to kind of work on this trading view map a little bit more. There we go, energy and minerals. There we go. So yeah, energy was kind of lagging a little bit. There were some performers, good performers, however, very few. But the majority of the big top names did decline. However, let's like I said, let's see how today's day is going to play out, and let me just get to or I will get to oil in a bit. But at the moment, looking at this technical picture here, you can see that yes, NASDAQ did perform nicely, did push higher, and looking at the cash index right now, we're seeing that the price is sitting at around 15,225 zone. So basically, not far from where it closed. Yesterday. Another thing that I'm keeping close eye on here is I want to see where this is going to open up today. For example, if by any chance this index, let's say, you know, when the European session opens up, and if it starts sliding heavily, then the U.S. futures are going to start sliding too. And again, depending on how, you know, if there will be some sort of a slide or something like that, then maybe this could be seen as a, you know, as an island reversal if we open up somewhere, you know, below yesterday's kind of below yesterday's open level here, open price. Again, a lot of speculation here, but again, at the moment, I would say like this, that as long as we stay somewhere above this territory here, let me just highlight this one, there we go. So if we stay above this area, yeah, I will continue aiming higher, but even, let's say, if we do drop below this area, I will consider this as a maybe potential little correction to the downside, where, for example, the 100-day and the 200-day EMAs can get tested, and then maybe we'll see a rebound, something like that. So that's in case if we do drop below this this highlighted area. If we stay above it, then yeah, I'll just continue aiming higher, and that's it, kind of. The next potential target for me, now I do have this one, the 16,000 mark here, but probably the initial one, maybe I'll aim for that 15,816 area, somewhere around here, and then yeah, we will take it from there, guys. For now, long story short, I am, like I said, I'm leaning a little bit more towards the upside if this index remains above this highlighted territory. DXY, boom, guys. I mean, look at this. I told you to keep an eye on this one, because basically what I said yesterday, that let's see if this is not going to, or actually I was kind of mentioning this throughout all of my kind of videos lately, that let's see if this is not going to end up being as a range, and so far that's what we're getting here. We're getting that range. So although we had a decent up move here on the 28th to the upside, as you can see here, I said that watch this level, this 99.42. In order for me to get comfortable with the upside, with further upside, I need to see a push above that barrier. Well, we didn't get that, and instead we got to drift back down, where we tested and broke below the 21-day EMA, guys. Now this is where I have a bit of concern. So if this continues, if this slide continues here, and we could end up, of course, testing this 97.80 zone. But if that fails to provide support, well, guess what? We could see this one going for maybe a bit of a larger correction here to the downside, towards these upside lines. Jumping into gold, and gold is enjoying the moment of, you know, weaker dollar, and you can see this pushing nicely to the upside. Look at this pin bar, and yesterday, guys, I talked about this, and I said that if we drop below this 1918 level, then yes, I'll aim for that 1895 zone, or even this 1878. So okay, we didn't reach the 78, that's fine. We reached this level, so that's fine as well. But the other thing, interesting bit, is that we have reversed sharply to the upside. So this to me looks like more of a, you know, a potential reversal signal. However, let's not rush into anything. I said before that at the moment gold could be seen just kind of oscillating around that 21-day EMA. So unless you like these scenarios, yes, feel free, you know, go in, but have your stop loss in place. So for example, if you do want to go in right now, then certainly a good stop loss below this or around this 1918 zone, you know, would be probably better, just in case, let's say, this decides to continue the move lower. So again, there are plenty of options how to, you know, protect yourself. The only thing is that if you are comfortable of trading this this moment when, let's say, an instrument is oscillating around one of its EMAs, so in that case it's the 21-day EMA. So as I said before, for me, I would prefer to wait for a push above this barrier, this 1966 zone, in order to go for some higher levels. So keep that in mind. Yeah, for now, I mean, say if we do pop above that 21-day EMA, then we could go for some higher levels. But again, we'll have to just take everything with a pinch of salt here. Now WTI oil. So beautiful reversal. I talked about this idea. If you remember, I said, I think last week, at the end of last week, I said that if we drop below that 107.12 territory, I'll go for lower levels, and especially if it, you know, also drops below the 21-day EMA, and I said I'll go for lower levels, and my next target will be somewhere around here, this 99.19 area, which is marked by the inside swing high of the 16th of March, and boom, look at this. I mean, we've reached that area, rebounded like gold, and kind of, you know, we're now pushing back, or at least trying to make our way up again. Now, this is where I need to adjust a few things here. First of all, this downside line is going to be drawn right now this way. Let's not forget that overall we're still above this tentative upside line taken from the low of the 2nd of December. So this medium-term tentative upside support line. So we're still above that. If we want to see something like a larger correction to the downside, then at least wait for that drop below the 99.19 level. Of course, if you are comfortable with that idea, then maybe you could already start looking at the downside if we drop below this this 102.87 level that I mentioned yesterday. I said that if we drop below this hurdle, then yes, I'll aim for lower levels. But you can see here that it did kind of do what it wanted to do, and then quickly by the end of the day it reversed back nicely to the upside. So excuse me, if you manage to capture that drop, congratulations. Now what can we do here is basically, well, watch, because in a way I would say yes, kind of let's say I would be leaning a little bit more towards the upside if we push above this 107.12 territory. If we do that, then I'll aim for the upside. The only problem that I have is, although it's a tentative one, but I cannot ignore it. So this downside line, so if we do pop above this 107.12 zone, keep your eyes on this downside line. If that gets cleared, then yeah, it's a little bit easier, could be a little bit easier, and we could go for some higher levels. But as I said before, this 115 area, that's something that I'm watching very closely, especially going into tomorrow. XRPUSD, guys, so I haven't looked at this one for quite a while, but yep, quite an interesting move here. So moving nicely to the upside, and if let's say we can start drawing some lines here, you know, an uptrend. So yeah, that's great for the buyers, for the crypto enthusiasts. The whole positivity here is the fact that, first of all, if we just, you know, ignore any levels for now, we just kind of look at the EMAs, for example, then yeah, we can see that the 21-day EMA just crossed the 100-day EMA, so that's one positive. In general, the rate currently sits above all of its EMAs, and you can see here that the 200-day EMA continues to provide that decent support. And we're also above this upside line. So in a way, a lot of things here playing out towards the upside. Nevertheless, I would like to see a confirmation break first, because at the moment I'm keeping an eye on this 0.9170 territory. Let's round it up here a little bit. That's the highest point of February, and I think, if I'm not mistaken, that's also the highest point of this year. Yep. So the current highest point of this year is roughly around that 0.9170 zone. If we clear that level, then yeah, we will go higher. We will go for, you know, for further upside, and then so on and so on. At the moment, the only thing is, of course, if by any chance the dollar kind of, you know, strengthens or something like that, then maybe there could be a bit of pressure here on the whole crypto world, or at least on these pairs which are, you know, which are against the US dollar. In a way, for me, for the downside, I would like to see maybe a drop somewhere below this hurdle, this 0.7856 level, and a nice good drop below it. Yep, could open the door towards lower levels. Now, jumping into a few pairs very quickly, guys, before I run out of time again, and I'll have to rush through all these. Basically, AUD/USD, nice, beautiful move here to the back to the upside, a good kind of rebound from this area. I talked about this level, this 0.7441, and now we're aiming for that 0.7556 zone. And if we manage to hit that and clear that, that's the highest point of October, then, well, I mean, the sky's the limit for this one, or I would say at least some of these other levels could be the limit. So yeah, the 0.7617 zone, that could be my next target. That's the high of the 25th of June of 2021. So yeah, we could, you know, end up getting there. But at the moment, I'm aiming just for the highest point of October. If that gets cleared, yes, I'll go for some higher levels. AUD/JPY, very quickly on this one. Yesterday, if you remember, I talked about this wait for that signal, because what I needed to see is if the 92.69 level will act as a good area of resistance. Now let me just remind you what that level was. That was this hurdle. No, sorry, not this one. I think this one right here. An inside swing low also of the 29th of June 2015, and also was near the highest point of August of 2015. So I said that if we drop and stay if we, you know, struggle, let's say, to remain above it, or let's say if we do push a little bit higher here and we fail to reach the recent high, then well, maybe a bit of a setback here could be possible. And my next target would be this 23.6% retracement on the Fibonacci, which is roughly around that 91 zone. So we, in a way, we got that move already. So we just fell shy by a few points from reaching that area. But to be honest, I would say like this. Now, if you're looking for some more downside on this one, be very careful, because again, if I said that AUD USD could, push a little bit higher here, of course, if dollar gets weaker, then yes, I mean, we could just see this one pushing nicely. However, if the equity world starts drifting to the downside, that's where the yen buying could, start, or the yen buying get activated again. And as I said before, no, sorry, I didn't say it before, but what could happen here is basically we could have that little divergence here. So AUD USD could push a little bit higher, for example, due to a weaker dollar. But if the yen buying is going to be very strong, then just this pair could start moving to the downside. It's not really the strength of the Aussie, but in this case it would be the either the weakness of the dollar and the strength of the yen. So let's keep an eye on this one. For now, like I said, if we drop again below this 91.57 territory, I'll aim for that 23.6% retracement on the Fibonacci. If that gets cleared, I'll go for that 38.2. NZD USD, also you can see here in a similar fashion as with AUD USD. So yeah, this one's climbing higher. Beautiful rebound from this area. I talked about this. 200-day EMA provided fantastic support. Yesterday I mentioned that, and boom, there we go. We have lifted again, and can we clear this barrier, the 0.6982 zone? Well, again, let's wait and see. Currently, I'm aiming for that. If we clear this, then I'll go for that downside line, because don't forget that we're still below this downside line, taken from the high of the 25th of February of 2021. USD JPY. Yen buying is resumed, and the weakness of the dollar here is kicking in. So we're seeing this nice correction lower. At the moment, I would say this way. First of all, let me get rid of all the drawings here and let me have a fresh start. Again, Fibonacci, one of my favorite ones. So let's I think we're going to take it from somewhere around here and draw it up until here. So 23.6% we have done already. Now we're aiming for that 38.2, which is roughly around that 121 zone. And then yeah, we will take it from there. So at the moment I'm leaning a little bit more towards the downside, guys. I'm aiming for that 38.2, and unless we climb somehow back above that 23.6% retracement here on the Fibonacci, if we do that, then I'm going to be taking a bit of a neutral stand. I just want to see what's going to happen after. But if we stay below that 23.6, then like I said, I'll continue aiming for that 38.2. USD ZAR, which is this US dollar against the South African rand, guys. Look at this, guys. Look at this beautiful move here. First of all, I talked about this a while ago, and yeah, let's remove all the drawings. So as you can see here clearly, we are testing this current lowest point of March. I think that we didn't even 48, yeah, so we didn't really reach that yet, I think. Yep, we're very close, just a few pips left. If we can clear that, then guys, further declines are possible, and my next target here will be this 14.35, something like that, 35 or 14.355, let's put it this way. That's the lowest point of October of 2021. That's going to be my next target if we clear and stay below this current hurdle near the 14,483 level. GBP CAD, beautiful rejection around here near this 1.6366 level. I talked about this pair, and yeah, so we did drop below this, but as you can see, we drifted nicely to the upside and stayed above this hurdle. Now that's very interesting, and well, this is the effect we're getting right now. We're getting that little rebound right now. So to be honest, I would say like this: that if we stay above this, hurdle, yes, I will consider maybe a move, to the upside here, a larger correction to the upside. If we drop once again below this hurdle, yep, I'll aim for the downside. Pretty straightforward on this one. GBP Aussie. I talked about this a while ago, and initially when I picked up on this, I said that I think we were somewhere around here. I said that we might see a bit of a rebound, test this highlighted territory, and then if it holds, another slide could be possible towards this 1.7741 level. We've reached that. Then picked up on this and said that if we clear this level, then my next targets are 1.7584 or the 1.7417 zone here, which is the lowest point of January of 2021, or in other words, the lowest point of 2021. So far, so good. Everything kind of worked out nicely here, and yeah, we have reached all my levels. In general, if you look at this picture, you'll see this. I mean, this wow! Since like the beginning of the end of this, the end of January, it has dropped quite significantly, guys, against the Australian dollar here, the pound. I mean, yeah. So from 1.92 to all the way to 1.74. I mean, that's quite a decent decline. However, that might not be the end. So the only thing is that if this provides good support today, with maybe a bit of a rebound here could be possible. So in other words, we can redraw this a little bit. Arrow removed. Let me just draw this downside line here, yeah, if this, let's say, stays. If this stays, let's say, below this downside line, then yeah, another decline here, further decline could be possible. However, if this gets broken, I will consider maybe a bit of a move to the upside, but I would like to see maybe a break of this above this 1.7620 zone. There we go. Euro JPY, guys. Yesterday I talked about this, and this is what I talked about. This is what I said, that yeah, if we do get a push higher but fail to reach the previous day high or overcome it, maybe that could be a nice signal for a potential reversal. And well, this is what we got. This is what we're now seeing, a nice correction to the downside. I would say I'm going to be targeting this 23.6% retracement on the Fibonacci right now, which is roughly around that 134.44 zone. So my only little issue right now, just judging from what I'm seeing right now, is this little hurdle. This inside swing low of the 29th of March, which is yesterday, and this 135.32 area. And if we do drop below this and stay below it, you can look at it on a shorter time frame. If we continue to trade below that hurdle, yes, I will continue aiming to the downside, but only up until this 23.6% retracement on the Fibonacci. After that, I'll just take it from there. I want to see what's going to happen after if we do reach this hurdle, and then I'll pick it up on this one again. Now, my most least favorite pair, or how to say it, or my most unfavored pair, there we go, Euro GBP. I do look at this one sometimes, but yeah, it's just it's sometimes a pain in the for now, looking at this, yes, it's pushing nicely to the upside. We're near this key resistance barrier, as you can see here. I mean, we've tested that 200-day EMA twice already. We did overshoot it twice, and but then we kind of drifted back down. So let's not get our hopes up yet. We are testing it. Of course, we are forming these higher lows here, but can we overcome this? Can we stay above this? Now, that's another good question. In general, I need to see a strong push to the upside here in order to, consider maybe a larger move to the upside. So, just wanted to point out that we are at a very interesting moment here. If you are looking for maybe for a long here, then we'll at least have a decent, stop loss, which you're comfortable with. Euro USD popped nicely to the upside. There we go, boom, and something is happening here. So now what I said before, that a break of this downside line here could attract more buyers, especially if the pair also rises above that 1.1121 zone. And there we go. It seems that we are willing to move higher. However, still that confirmation break is needed. Yesterday we climbed above it but failed to stay above it. Now if we do climb above this barrier again and stay above it, yes, I'm gonna aim for that 100-day EMA, which is roughly around here somewhere. Nope, not here, but here. This 1.1267 zone, and then we will take it from there, guys. But only like I said, only if we do clear this level and stay above it. So guys, that's it for this session. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, guys, your views, your likes, your comments. I really do appreciate that. So thank you very much. Have a wonderful trading day. Stay safe. Have your stop losses in place, guys, and all will be fine. And join me tomorrow morning, as always, in my Traders Espresso, 6 o'clock GMT time. Thank you very much, and bye-bye.